And speaking of these emerging markets, we're here inside Egypt, where yesterday I caught up for an exclusive interview with the country's finance minister, and I asked him how worried he is about that kind of contagion. Let's listen in to what he had to say.
It is worrying. However, we are able until now to observe these negative effects, and Egypt economy is a diversified one. Egypt economy has sources to address these. However, I have to be very honest, up to a limit. So hopefully that what is happening will be corrected and will moving to a stable position, because yes, we are observing all these shocks, oil prices, emerging markets problems, increasing interest rate, and all of that. But again, if they continue like that, it will be a problem for us.
Basically, you have Argentina, you have Turkey, but also Egypt has a high amount of debt. And the question is, are you just increasing that and really just paying down the debt you already have? How worried are you that Egypt won't be able to sustain its current level of development over the coming year, given what we're seeing in other emerging markets? We
are addressing that. We're recognizing that we have a high level of debt and we have to reduce it. Yes, we know that the government is working on that by policies which will be approved in the coming few weeks to reduce the level of debt. This is number one. Number two,
can you give us a hint on some of those policies?
For example, try to encourage structural reform in our economy, try to put targets for the level of borrowing, externally and internally. Also, the type of debt we are going to borrow will have to reshape many elements within a portfolio, and eventually this will address the issue of reducing the level of debt and the level of debt service. But eventually we need our economy to grow, because with our economy growing, creating jobs, creating more revenue means that our revenue growth is much faster than our expenditure growth, which can also help us to reduce the level of borrowing.
And speaking of that kind of growth, of course, later today, Nancy, I'm going to be heading out to what is essentially a new administrative capital here in Egypt. Essentially, they're building a city the size of Singapore. It's going to accommodate some 6 million Egyptians. They're going to open this as early as 2019. At least they're going to bring all the ministries out there. But in terms of financing that, they've got a long way to go before that project is complete. That's another mega project, just like we saw with the extension of the Suez Canal a couple of years ago. It's really being executed by the military, even though they've been working within the private sector to get that done. And of course, they've got some $18 billion needed in updating their electricity infrastructure over the next few years. So of course, this is something that they're going to be watching really closely, because they've not only got to pay down that debt, as he says to me earlier in that interview, but he also is talking about really being able to continue financing all these big public spending projects, and really trying to, at some point, galvanize the private sector to get involved as well.
Yeah. And certainly, Hadley, if they're spending all that money in the mega city, you don't want to see a time in which global growth slows. That could affect the region if you want to see investment into that project as well.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.